Good morning, everyone. Happy Saturday for the Metro New York chapter of National Black MBA. And once again, welcome to our real estate series. We have a great guest today, Jessie Lizardo, and we have our two champions of real estate and wealth building, Larissa Longchamp and Ms. Vonetta Hawkins. And the one thing I want to tell you as we express and move forward with the program is that this program is designed and developed to help you develop your best professional financial portfolio. I want to be very intentional when we talk about financial building. Is here to and help you invest so you could have close this wealth gap that's constantly being projected, marketed, and promoted from generation to generation. You will be a legacy breaker. That is our attention. You will be a legacy breaker. So, without further ado, I'd like to introduce Ms. Larissa Longchamp, and she will introduce our panelists and tell you more about our program. Thank you.
Thank you, Andrew, and good morning, everyone. As Andrew said, happy Saturday. My name is Larissa Longchamp. I'm one of your co-hosts along with Vonetta Hawkins. And what we're doing today is providing you with a preview of our real estate investment series. Through that series, what we want to do is take you through some of the very important and very specific steps and some of the information and some of the planning and preparation that you'll need to start investing in real estate. As Andrew said, it's a tremendous way of bridging the wealth gap, of building generational wealth, and it's an opportunity that we should all be able to take advantage of. So what we want to do here is give you the information that you need to understand that process, to prepare for it, and to begin investing. Our guest today is Jessie Lizardo. Jessie is a realtor, property manager, and investor herself. So we're really excited to hear what Jessie has to share with us. And before we get into our discussion, I'd like to have Vonetta introduce herself, and then we'll give you a little bit more of an idea of what the series will cover. So Vonetta.
Awesome. Thank you. Thanks, Andrew. Thanks, Larissa. Hello, everybody. I just want y'all to say, first of all, pat yourself on the back because you just got on the road to investing in building wealth and building a legacy for yourself. And this is super exciting times. We're super excited to really bring this series to you. We had such a great turnout with our first preview when we rolled out what the series was going to be about. So we figured, let's do another preview. Let's bring another dynamic speaker, a dynamic investor to kind of talk about her journey and allow us to, again, just really deliver what this 12-part series is going to be about. So buckle up, get ready, pay attention, get your notes out, because I'm telling you, you're going to capture some great jewels today to really help you get on the journey and then also get signing up for this 12-part series. So Norvell, do you have the presentation to pull up so we can kind of just talk a little bit about the series? Awesome. Keep going. That's us again. We've given you guys the description. There you go, Larissa.
Excellent. So as we mentioned, the series is going to be 12 parts. So it's a weekly series. Starts next Saturday, April 24th. So you'll have the opportunity to register. And we'll be sending out the registration information. So what we're going to do first is just, again, give you an overview to give you an idea of the specific parts of the series. So next week will be week one, and the focus of week one is going to be the offer. So as you go into this transaction, one of the most important parts, and I would say in this market, probably one of the most difficult parts, is being able to structure an offer that would be accepted by a seller on the property. Why? Because it's a very competitive market. So there are specific things that you're going to want to understand to be prepared. To have an idea of assessing the market, assessing the conditions, and figuring out what's that right number and what might be the right terms to include in your offer to make sure that it's accepted and that you can get through and close on the property that you want to purchase. Again, it's very competitive today, so that's going to be key in being prepared to start the process. The next week will be the property. So what type of property? Again, there are different types. There are multifamily units, there's mixed use, there are single family, so depending on where you are and depending on what makes the most sense for you, you really need to look at what type of property you want to purchase to reach whatever your investment goal may be. It may be a fix and flip. It may be something that you want to buy, hold on to, and generate rent. So it's important to understand the different property types and the benefits and disadvantages of each. Part 3 will be the money part 1. So yes, there are 3 parts to the money. Why? Because there are different sources of financing, depending on your situation. And again, depending on what the goals are that you're trying to reach. It's important to understand the different options for financing, what each one looks like, and how they each fit your plans for investing. Next slide, please.
Awesome. So I'll just pick up. So Larissa talked about part 1 being the money part 1. There's 2 additional parts of the money. So there's going to be 2 additional weeks where we're really just talking about that financing piece. And when you see for part 2, the money, it's around soft money. And the great thing is like when we start talking to our panelists, you're going to kind of hear her journey and her financing options. And one of the things she's going to really speak to is that soft money piece. And that soft money is not your traditional bank. It's kind of like the middle of the road type of financing, where maybe they don't close in 2 weeks, but maybe they don't need all the documents that a traditional lender will use. But it's definitely kind of like that middle of the road lender. And then the part 3 is those hard money lender. Hard money lender is a lender that's really going to be able to get you in and get you out with the least amount of documents, the least amount of verifications, and allow you to close that loan in a very short period of time. So those are the 3 parts that we're going to have just around talking about the financing option. The fourth, the next week, for week 6, is around ownership structure. And this is really talking about how do you really structure what name do you buy the house? Do you buy your investment property in your personal name? Do you do it in an LLC, a corporation? So we're really going to dig deep into how do you structure the ownership of your business, of your investing, and then also what does it look like from a legal perspective? What does it look like from an accountant perspective? So we're going to bring in some great speakers to kind of speak to how do you structure your business and where is the best value in that structure for itself. Next slide.
So the numbers in week 7, we'll get more into those numbers. So what should payments look like? What should rent rolls look like? How much do you want to generate? How much is it going to cost versus how much will the property generate in rental income? Again, those are really important considerations. So we're going to get into a little bit more detail about what the numbers should look like to make the investment make sense. In week 8, we'll talk about leasing legalities. So of course, what makes the investment an investment is the fact that it's generating rent. So you may have different types of tenants. There may be residential tenants, depending on whether it's a residential commercial property, or you may have commercial tenants. You may also have a mix of the 2. If, for example, you're buying a mixed use property. So what does that mean? What types of terms do you want to include in a lease? What does it look like if a tenant isn't paying and you may have to evict them? So those are really important considerations, and we'll get more in depth in those in week 8. In week 9, we'll talk about syndication. So syndication is a way of getting together and forming a group, an investment group, to pool funds together and to take advantage of an investment opportunity. Next slide.
Okay, so here we go. Where to buy. That is, you might think that's a small decision, but in this market, that could be one of the biggest decisions. There's a lot of different things out there that, places in which you can buy, whether you're going to buy locally, you're going to buy out of state. What benefits come with the market in which you're purchasing in. So we're really going to bring in some dynamic speakers to kind of speak about the market decisions, market area, urban enterprise zone. So just a lot of value on, how do you find the exact place and where should you actually purchase your investment property at? You might have things all over if it just makes sense for your particular picture. The next piece is around renovating. So when you're buying properties, whether it's a commercial property, meaning like a warehouse or an office building, or you're buying a multi-unit property or a single family property, there's a lot that comes into place when it comes to getting permits, working with contractors, getting things done from a repair perspective when it comes to those properties. So we're going to really bring in some experts to kind of help guide you and speak to you about what that looks like. What are the pros and cons, and how do you navigate that market from a contractor and permit perspective? And then the last session is the property tour. Yay! So with this session, this is going to just kind of like bring it all together, bring it all home. We're going to have, despite the pandemic and COVID, we're hoping to have a nice live tour and kind of go and visit a real property, kind of have everybody walk through the property, bring a professional to kind of talk with us about it, show us what we should be looking at, and just give you some real life experience, going into a property and looking at it with an investment lens and not necessarily the lens of I'm going to be living in this property. So we're excited about the property tour. We're hoping it can be, a real live one rather than a virtual one, but that's our ultimate goal, is to really make it a live tour. So that's our 12 weeks, people. Norville, that's it with the slides. Thank you. That's our 12 weeks, and we're super excited to kind of really bring you all on that journey with us. And hopefully at the end of the day, the goal is to give you enough tools that you need to get into investing, like right now. So with that being said, I want to take a second and say, welcome to our fabulous Jessie Lizardo. First of all, I adore her. She is an amazing businesswoman, straight boss lady in the market from a real estate perspective. And she is winning when it comes to investing in real estate. So you guys, I'm telling you, seriously, if y'all didn't get your notes and your piece of paper, get your notes and your piece of paper right now, because the things that this journey that you're going to hear that she's went on, you're going to walk away just like, I need to sign up like immediately. This needs to happen. So Jessie, I just want to welcome you to the stage and maybe just give you a moment to just introduce yourself as well.
Thank you so much, Vonetta. It's actually a pleasure for me to be here, an honor to share my experience. I have to congratulate you and all the team, because this is something great to do for our community. People need to hear this because we don't come from a wealthy family, so we have to create that wealth. And we have to invest in real estate. We need to have that passive income coming in every month. And if you're like a single mom, if you're just a regular, 9 to 5, a hard worker, you need to be here and learn from somebody that actually have done a lot of stuff to be able to have what I have right now. Like my background, I mean, is like a very inspiring testimony, if I can say that. So don't be afraid, because this is the first thing that people think is like, oh my God, I don't know how to do it. Maybe this is only for wealthy people. No, normal people. And you don't have to be a real estate agent. You don't have to be a loan officer. You don't even have to be in the real estate business to start investing in real estate. Yes, we have that advantage because we're in this business, but that's why we're doing this, to give you the strategy of learning the process. And yes, like Vonetta said, my name is Jessie Lizardo. I'm a real estate broker. I've been in the business for 11 years. I'm a property manager, short sale specialist, and also an investor. And I started the investment part of my business 2 years ago. After learning from other investors, I was, helping them to find the right properties. And while I was, doing this, I'm like, okay, I have to learn, because I think this is something that is gonna bring my business to another level. And it wasn't easy, because as a single mom, you have to do a lot of stuff. We have a lot in our plate, but it's not impossible. if you put the work, if you organize yourself, if you if you learn from people that have done it before, and I like more to learn from those that started from scratch, because I relate to that type of people. It's very different when you inherit 3-4 properties that you have to start from scratch, from zero, like having nothing, and that's how it started. And that's, my goal is to be able to share my experience, and I hope you guys can learn today from that.
I love that. So, two things I took out of what Jessie said is, one, she didn't come from a rich family, but a rich family gonna come from her. Yes.
Yeah. Yes.
And the second thing that I took, and I want to hope, and I hope that all of you guys heard this, is she just started this 2 years ago, 2019.
Mm-hmm.
Or, we'd say we just started 3 years ago. So 2+ years ago, she just started getting into investing. So she wasn't doing it her whole life. Nobody gave her any money to start getting into property investing. 2 years ago, her journey started. So thanks for sharing that, your humble beginnings and what you learned. And I will say another thing I picked up was, you said that you have been seeking mentorship, I would say,
Mm-hmm.
from experienced people. So people that have a similar journey like yours, that help guide you along the way. So I really like that. I think that's definitely helpful, for our members to be able to seek out the people that have went along that road already, and just kind of giving out that great advice. So it's good that you have those kind of people that you're able to pick up information from, Jess.
Yes, thank you.
So, Jessie, you kind of just set the stage for us. And I know that different people start on this journey in different ways. So can you start by just telling us about how you yourself first got into just home ownership, and then from there, how you began investing in real estate?
Yes. The first property I bought personally was a multifamily, 2 units. And I recommend this to everybody because you live in one unit and you rent the other unit, right? Or if it's a 3-family, it's fine as well, but you have to start looking at yourself first as a homeowner and a landlord in a small scale, because you live in one unit and you rent the other one. So that's how you start learning, how to be a homeowner, what is the responsibility of being a homeowner, and the responsibility of dealing with tenants in a small capacity, right? That's how you start. So that's why I purchased my first house. It was 2 units. I live in one unit and then I rent the other one. And after that, we're able to refinance that house and get some, cash out of that property, and then that money, put it into another property. That's how you get your second property, and you keep just doing that. That's how it started, with one house, multifamily, 2 units. That's it. Yeah.
I love it. I love it. So right now you started off with that first property with the 2-family. So what other types of properties do you own, Jess? And then what were some of the strategies that you did with choosing those type of properties?
Yes, I own six properties. 2, I own them on my own, and the other 4, I own them with business partners. And I have a 5 units. That's a mixed use. We have a 1 store in the first floor and 4 residential units, above. And we have 2 multifamilies, 2 units each. We have 2 single families. And I have the house where, I am right now, the house that I live in. I also own, a condominium at some point, but the way, the way we have, and you might ask yourself why we have these different properties, because some properties you want to hold, and the single families, they're good to buy, fix, and flip. The single families, because you don't have that much, return of like I said, I would say, like, you know, when if we rent it, we don't get that much cash flow, you know, for us. So we just have to flip it. That's the best way for us to do it with single families.
So you're doing a little bit of everything. So you have your condo, you have, from an investment perspective, you have a 5-unit with a store and 4 apartments above it. And then you have 2 multifamily, so 2 family properties.
Yeah.
And then you're also doing fix and flip.
Yes.
Properties that you're fixing and flipping. So people, let me just rewind. Did y'all remember I said in the beginning, Jessie just started in 2019.
Yeah.
See that? Look, this is me looking at the crowd. The crowd is like, oh my God.
Yeah. And you want to start, like, fix and flip is a little bit more difficult because it comes with more risk. You have to deal with contractors, you have to deal with, you know, permits and all that stuff. So I think we started with the multifamily, then the mixed use, and now we're in the fix and flip, you know, and I think it all, I don't know, we started it and then you just keep going, I think, you know.
Once you get in there, it's like, once you get in there, you see it, it's like you're off to the races. And I think, you know, the great thing, what you just touched on, is where you said the fact of buying the multifamily is less risk than buying a fix and flip that has more risk, because all of the contractors and work and things that has to be done, and there's no money coming in till you sell it. So right now, that whole process is what you're doing. So I love that piece. And guys, if you pick up on a lot of the things that she speaks to, are the things that we're going to be kind of talking to you throughout the series. So one of the classes is going to be around the contractor piece, going right in hand, what she said around the fixing and flipping and the permit piece. So awesome. Thank you, Jess. Thanks.
So, Jessie, all of your properties are here in the New York, New Jersey area. I think all in New Jersey. Is that right?
Yes.
So we're in an area where, you know, multi-families make up a good amount, pretty strong amount of the housing stock. And for some people, I think it's a very attractive investment. But at the same time, the fact that, you know, the opportunity is that there's such a high return from rent. But I think for some people, there's a little bit of concern around the risk having so many tenants. So can you tell us a little bit about how you've managed that risk and how you kind of take that into consideration in your process with tenants?
Yes, very important for everybody to understand that renting a property is very easy, but when it comes to find a tenant, it's easy, right? It's easy to put the tenant in the house, but when they start making the payment, it's very hard to take them out. So you have to do your homework in the beginning. You have to do the right screening, a background check, credit check, income verification. You have to do your homework. And there's different websites that you can check, do a background check, because you don't want to have any problems, you know, at the end. Especially now we have that situation with COVID. And like I was telling you guys, we're on a 90% collections in my office from the tenants. And personally, the properties that we have, we don't have any tenants like that we have to evict. All of them are paying. And the other thing that you have to do as a landlord is always respond the tenants' concerns, fix the house, whatever it needs to be done, you get it done. That's the best way for you to have a very good relationship with the tenant. And they will take care of your property. If you fix, when they call, like, you know, just put yourself in their shoes. I mean, they're living there, there's an issue, it needs to be fixed, you know, and that's something that it will help you to have that very good relationship with the tenant.
So you mentioned the fact that it may be difficult. So if you get to a point where a tenant isn't able to pay, it may be difficult to get a tenant out. And that's something that can vary from one place to another. So I think it's also important to understand going into this process what you know, laws may be in the area where you are for the eviction process, and factor that in when you're dealing up front, as you said, with the screening of tenants, to make sure that you have tenants that are going to be able to pay as much as possible.
I want to add something else too. When the landlords think that, okay, let me just rent the property on my own, and they don't want to hire a real estate agent, that's the risk. because real estate agents, we have to qualify the tenant. We have to do it as a real estate agents. That's our job to do it. Qualify the tenant, check all the application details, everything, and call the, you know, the past landlords or reference. So it's very good that the landlords understand that for them to pay a real estate agent to rent the property is the best investment that they can do, because they're going to have a very good qualified tenant.
I like it. I like it. And, you know, just thinking about just the areas that you have, where are your properties at, and why did you choose those areas?
Yes, I have one in North, the mixed use is in North Plainfield. The other 2 units in one single family, they're in Plainfield. And the other one, I have it in Piscataway. That one, I just got it in my house in Somerset. But I chose those areas because that's my, that's where, you know, 80% of my time I work in those areas. So I'm very familiar with the area. You know, I feel comfortable in those areas, and the market, you know, rent market is very high in those areas too.
Oh, and that's, you know, that's, so 2 things I got out of your choice for choosing your area is market rents and familiarity. So
Yes.
you're in this space, you know this space, you're comfortable with this space.
Yes.
And in this space, you also know that you can get the market rents, especially for someone that's, you know, buying and holding, you can get the market rents that you want for your portfolio.
Yeah. Yeah. There's also, if you're like, you know, I'm a property manager, so I know a lot of contractors, a lot of people in case of an emergency. If you just, you know, you work in any other field, you want to buy properties close to where you live, because if there's an emergency, you can go to that property. If you're thinking to buy something far away from where you live, you will have to hire a property management company. But you want to be close to that area. You know, where it is where, you know, people, you know, like you need a plumber. Oh my God, I know that plumber, you know, can get there quick, you know, so.
I got it. So if you're going to purchase outside of your comfort space, you definitely want to have a property manager managing the property.
Yeah. Yeah.
Love it. Love it.
So in today's market, I think with the cost of properties, one thing that people, that appeals, I think, to a lot of people is the idea of partnering. So have you partnered with anyone in any of the investments that you have? And if so, can you tell us about how that worked? Yes, yes. At first, you need credit, you need money, and you need the resources, right? So think about who do you want to partner with in the business. In my personal experience, I partnered with my brother. He's a contractor. And with my sister-in-law, she's very good with finances. And I am the one who always, you know, I get the properties, I handle all the, you know, title companies, city inspections, legal stuff. So we're a very good team because we bring something to the table. My brother, he fixed the properties, you know, so I don't touch the money because I spend it. I'm very good at spending the money, so I don't touch the money. That's my sister-in-law. She's very good. She handles all those, you know, income and expenses with the properties. And that's what you need to partner with, somebody that's gonna bring something to the table. Or if you're like an attorney, or you're a nurse or a doctor, or you're a very busy person and you have like $20,000 or $50,000, there's some investment groups where you can put the money and they will give you a percentage in return for each property that you're, each project that you invest in, which is another option. But in my case, I partner with a family members, which is kind of, you know, tricky. So you just make sure everybody brings something to the table, so you don't feel like you're doing less or more, you know. So that's key. That piece that you just mentioned there is making sure that everyone brings something to the table. What's the specific value that you've seen with that partnership that you have with your brother and your sister-in-law?
Well, like we understand our roles, and I know that if my brother said, okay, we're gonna fix this property, that property is gonna be fixed because he's gonna be working that I don't have to be calling like, oh, did you do this? And then I know he's gonna do it. He's very responsible. My sister-in-law as well, and they know when it comes now to check the attorney review, the inspections, the legal documentation, the lender, review all the documents. They know I'm gonna handle that. They don't have to keep calling me, oh, did you do this? So you have to make sure you have proactive people. In real estate, any day you're losing money, because if you're planning to flip a property, every day you pay interest, you pay taxes. So and you're not making that money. You have to be proactive.
I like that, Jess. I think for me, my kind of takeaway was work with people that can bring something to the table. Yeah. And if you don't have, if that's not your avenue, or you don't want to be involved, there's other ways for you to get into investing and not have to be involved. And your sole involvement is going to just be money. So you can partner with those investment groups where you're just giving them, X amount of money, and you're getting X% at the end once it's all well and once it's all said and done. So, there's a lot of different avenues in which to get into investing. I love the piece. I love that you and your brother and your sister-in-law have those great dynamics. And I like how you said, you don't have to worry. Like, we had another speaker on before, and that was her thing. Like, she don't want to have to worry about nothing. She just wanted everything to be done. And that's kind of why she did certain things a certain way. And I hear that from you as well. It's like, you're working with people where you don't have to worry about the contractors. You don't have to worry about the finances part. You're going to do your part, and the other parts are going to get done. So I love that. And I love that added value where if you just want to invest and you got some money, you just want to put it in, do it and let them do the work and just get your check at the end. Like, I'm about that check life. I'll take the check life too.
Yeah.
Awesome. So I know we talked a little bit about you're an experienced real estate broker, and you're also experienced property manager. But for our people, and maybe just, how are you handling your day-to-day management of the property? And then also what would be some advice around people if, they're getting into this business, how should they manage if they're going to utilize a property manager?
Yes, well, the day-to-day, you just go by calls, we inspect our properties once a week, we check, okay, but we also get the call from the tenants, where there's a leak here, so we have to be proactive in that, so you just have to make sure you call the contractor, okay, go and fix that and make sure everything is done. And then it depends, it depends how many units you have. You can self-manage. If you just purchase your first multifamily, you manage your own and you learn. The more units you have, the more you're gonna, now it's time to hire a property management company, because remember, you're doing your job, then you have to handle the tenants, when each that they have. So it depends how many units you have. But I think for now, I'm managing our own unit because, I can do it. But it's always good to have a property management company if you have, let's say, more than 10 units, because then it becomes too stressful,
Listen, first, hold up. Listen, you've been doing this since 85. The regular person, the people on this call, they might be the property manager with one property. I'm just saying, listen, I don't got time. Listen, they might 2 properties. You might need somebody to handle that. So, okay, all right. I love it.
Yeah, it depends what you do, but for me, I do this for a living on a daily basis. So for me, it's easy to do it. But I know for some people, they might just they're too busy. They're like, no, let me just. And I recommend property management companies because you're going to have a very good management company. I know you're going to interview them, and because they handle all the tenants' complaints, they collect the rent, and then at the end of the month you get your check. So And
Love it.
just for you to know, property management company, the fee is very small. It's not a huge fee, which
Right.
you might think, oh my God, they charge $1,000. Like, no, it's 8 to 10% of the monthly rent amount. And
Nice.
that's
It's worth it. It's worth it.
it's worth it. Yeah.
Definitely a good investment. Definitely a good investment.
I would also say, Jessie, you mentioned you yourself are a property manager, but you also said that if you had, for example, at 10 units or more, you recommend even hiring a property manager. So someone who knows the day-to-day of what that involves. I think if you're saying that you would need a property manager, then that just sort of underscores the importance of having that and what that would sort of take off your plate as the investor. So that's really valuable information. Going back for a second to, the property types themselves. So we had a previous guest who, her investments have been mostly in new construction in other markets. So here we have mostly older homes. And so that brings with it a very specific type of consideration when it comes to repairs. So can you tell us a little bit about how you manage that, the risk of having to do repairs? Particularly because around here, most of the homes that we have are older.
Yeah, I recommend once you get the property to do like an inspection and check and try to fix everything at the beginning. You're gonna receive less calls from the tenants if you fix, everything. It's not always the case that you can do it because if the house is it's fully rented, but little by little, you can start that project and it's gonna help you later on, you're gonna have a very happy tenants and it's more easy for you than you just take the house and with all the issues that how old houses come and you don't do nothing, it's gonna be a headache because you're gonna get calls every day from tenants. There's a leak, oh my God, my bathroom got clogged. I mean, those are the calls that you get, and sometimes you get very nasty pictures, so you don't want that.
So when you do that, do you sort of go in and look over the property? Do you kind of prioritize things? Do you look at what needs the most work?
You talk to the tenants, they will tell you, oh, as soon as you get the property, you introduce yourselves as the new owner, they tell you everything. Oh, I have this leak, they never fix it. And that's why you start taking notes. Yeah.
I like that. One thing you mentioned that I thought that I picked up on is when you're going in up front and you're inspecting the properties, and even if you don't fix everything right there, you have your list and you're starting that project. That means so much to a tenant, especially a tenant that just had a property taken over by a new owner, because now they know you're a proactive owner, you care about the property, and they're already thinking that you're going to be that landlord that's involved and want to take care of the stuff. And then they're not going to be stalking you for the stupid minor things because you came in up front, and they have totally more respect for you than if you just purchased it, never saw them, and waited for that phone call. So I think that's a great strategy, Jess.
And most of the time when you purchase a property, the tenants are underpaying rent. So remember, it's gonna come to the lease renewal. And if you want to increase the rent, that you have to make sure that the tenant is happy with you. So it's easy for you to increase the rent.
I love that part. Because a lot of the stuff you purchase had tenants in it. So you're friends with them now, getting stuff done, updating the property. So even if they don't want to renew, you have a better looking property than when you purchased it. I do. I like that. I like that. So let's flip a little bit and talk a little bit about financing. So you figure you started, let me just repeat this again, people, for all that just joined. She started in 2019 and owned 6 houses.
Yeah.
Okay, I just gotta keep saying that because people are joining, and I just want to make sure they know that Jessie wasn't invested all her life, and she didn't get that $1 million to start investing in property. She started in 2019. It is just 2021, and she owns 6 houses, 5 investment properties, or 6 investment properties. So, with that being said, goals, exactly. #goals. Dina said in the chat. So matter of fact, in the chat, put a one in the chat if that's about to be your life. If that's about to be you, let's see some ones going up in that chat section right now. So, okay, so Jess, let's talk a little bit about, let me hurry up with time. Let's talk a little bit about financing. Oh, I see the ones that the people, it is happening for them. Let's talk a little bit about financing. So how did you, what kind of financing did you get? You know, we talked about our series is going to be about hard money, about bank money, about soft money. Like what kind of financing did you get with your properties? With you, like
hard money. We needed hard money because we needed to act quick. It's not cheap. Hard money is expensive, and you have to keep the at least, you know, for 6 months the paying the interest. There's different type of hard money lenders. Some of them are the interests are lower than others, but I'm more about procedure. When I need to act quick, so I rather have or pay a little bit more interest rate and get less paperwork to fill out into, you know, a pre-qualification process. That's me. And I need to be everything easy, you know, okay, you need this one sheet. There's lenders that ask you for so many papers and so many stuff, and you're like, okay, I don't have the time for this. So I'm working with one which I like. It might not be the best interest, but for me, it's like easy. You know, we don't have that 1,000 hours a day, so we need easy and quick. Yeah, and hard money, you need to have a little bit of it. It depends on your experience. If you're a first time, yes, you have to pay 25%, and the interest a little bit high. Then you get more experience, and they reduce your down payment and the interest. So I started with hard money, but remember that money you wanna refinance, or if it's a flip the house quick, so you don't have to keep paying for a year, you know, that interest.
So were you able to, since you started off with the hard money, have you done any refinancing, and what type of process was that?
Yeah, and for that, then you need credit. You need a very good credit. And that's why you need the partners, because one might not have that excellent credit. It might be like fair, but the other one has a good credit. So it works very great for me to partner with my brother and my sister-in-law as well. So yeah, we refinanced the mixed use and two of the multifamilies. We were able to refinance. And the multifamilies, 2 units or 3, you can choose any lender. For the mixed use, you have to be a commercial lender in a different program. There's programs where when you refinance that, they might give you a little bit more, like a little bit higher interest rate, but they don't check your income taxes. They just check your credit. So that's like, okay, great. We refinance, we get that money out, cash out, and then we put it on another property.
I love it. So, you know, I just want to, some people, you know, just from when you say high interest rate, you're talking about maybe like 10, 12%.
8, 9, or 10.
Right.
There's others, like, you know, I know others that they have better rates, but they have a lot of fees.
Right.
So it's you have to balance and check, and maybe the process is too complicated.
Exactly.
It depends how you see it.
But I wanted people just to know that when you say high rate, it wasn't like you're paying like 20%.
No.
Right,
I think the max I have paid is 10%.
Right. That's kind of what you see the average when it comes to the hard money lenders. But again, I like how you said, Jessie, you want to be able to get it, get in and get out. Like give me the money, give me by the house, and get through my 6 months. But also just touch on a little bit of, I want to just say, guys, I hope you really picked up that she started off with hard money. She switched a little bit to soft money. And then she also maybe have some traditional as it relates to some of the properties. So it just all depends on what you need for your picture at that time with that specific property. So, all right, love it.
Jessie, I love the point that you made about sort of the value of your time and the effort required. So I think number one, it's important to understand those options up front. So sometimes going to a traditional lender, there is a lot of documentation required. So that hard money piece, as you mentioned, might be a short-term solution up front, just to prevent you from having to go through all of that extra work or the time and effort required. And if you have a plan to transition from that into some other type of financing through a refinance, it could be a solution to get you in up front. And then, and I think you said short term, so 6 months. After that 6 months, then you got into the refinance into another loan. Yeah. So that's great to know. And this next question is going to touch on something that I saw in the chat, and I see some great questions coming in. So thank you for those. And we're going to get through just a few more questions here with Jessie, and then we'll start taking the questions in the chat. So I'm really excited to see everybody so engaged. So talking about the partnership that you've had, is there a specific structure that you have? I think there was a question about it being contractual, whether it was an agreement with your brother and sister-in-law. So is there a specific way that you structured that?
In my personal experience, we're own an LLC, and the three of us were members. If in those for the property that we're holding, the other ones, the fix and flip, we also create an LLC, but it's an LLC just for that particular property for each of those single families that we're gonna flip. And we're members too, so we have part of the ownership. And then once we close on those two properties, we're gonna dissolve the LLC. But I know in details, I know you guys are gonna have a nice interview with a CPA, and he can tell you, and an attorney in detail, where the advantage and disadvantage of that. But that's how we structure. There's different ways too, joint venture, right. And but I'm more like I said, since I don't have a lot of experience, I just go for the the simple. I think I can say the simple steps or baby steps.
And that's the good thing, Jess. It's like having the LLC, whether you do a corporation, buying things in your own name. So our other speaker, they have purchased things in their own name. So it's a big difference, and really understanding. That's why we're bringing in, like you said, the attorney and the accountant to really explain to our members of the series, why would you put it in an LLC? What are the values of putting it in LLC? And one other thing I just want to say, you have your multi-units in the LLC. But tell me a little, because I know we talked on this, and maybe we jump to questions after. Talk a little bit about with your fix and flip being in an LLC, but it's a fix and flip. What do you do with the LLC? After you're finished with the flipping of the fix and flip.
Yeah, we dissolve the LLC. The LLC gets dissolved because you sold it, so you don't. And the LLC usually is, we put the property address. Gotcha. It's a 1255 George Street LLC. Boom. Yeah. Awesome. But everybody, but the people have to understand that you're personally responsible for those LLCs. Like they check also, you have to provide your social security, everything they check, because you're personally responsible for the LLC.
I love it. I love it. So you heard that, people. So with her properties and what she's buying and holding, those are LLCs that is one LLC that she's utilizing for those properties. But with her fix and flip, if it's one Main Street that she's buying, she's doing LLC one Main Street, and then she's dissolving it. So good, we're gonna have the experts come in, talk to you about that type of information. What does the dissolving look like? How do you get the LLCs opened up? So, so many jewels, guys, so many. Okay, all right. We have. Do you want to do our last question, or do you want? I think we have like 5,000 questions. I think I want to get. Let's do this. We have 9 million questions. This is amazing.
We do have some great questions in the chat, but I did want to just get to that last question we have for Jessie, because I think this would be really valuable for everyone. You've purchased these properties in the last year and a half. Is there a specific strategy that you've had as it relates to the profit that they generated?
Yeah, well, and it's something important for everybody to know. This is like a business. First year and first 2 years, you don't see the profit. Everything is investing. I think we're gonna see our first profit, I will say July, when we're able to close those 2 flips. But still, the money that I get, I want to reinvest, because I have my own job, and I'm just creating something, a legacy for me and my kids. And only for one of those 6 property, 2 that I personally own, I only get profit from the multifamily, which, just for you to know, my multifamily, the one that I personally own, pays the mortgage for the house itself and for the house that I live. That's the only one that I can say like, oh my God, you know, that's my my profit, because I'm pretty much living, the tenants are paying my 2 mortgage, so that's a good thing. The other 4, we still haven't made any profit yet, because everything we reinvest, and that's how we do it.
That's great. So you're taking more of a long-term view and really
Yeah.
just reinvesting.
Yeah.
Thank you. So I think we have so many questions in the chat. I think we'll start to take some of those questions.
Yeah, so maybe Andrew, are you able to pull up the questions, or Norval? Okay, maybe let me see.
Or we'll take them.
No. I was
Sorry.
trying to get to him. Go ahead, Noel. There you are.
So, hi, good morning, everyone. So we're gonna go to a question that Dina McDonald asks is, you know, what's the reputation of some of these investment groups, or what would you recommend? And I know that's typical to look at it from either starting an investment group or either joining an investment group. So from your perspective, where do you stand in terms of the reputation of the investment groups?
Yeah, well, I know 2, which I can recommend, because I know them for like 11 years since I started, and we started like from scratch, all of us, and they're doing great. One is Arcad Group, which I can provide the information to Vonetta, and Vonetta can share it, you know.
They're the one, I'm bringing them in to speak.
Mario Camino, he's the head of that group, and they're very good. They like to help people like us, like, you know, beginners. Very good. They give you option. How do you want to strategize this? You want to do it on with, you know, you want to just invest the money, or just you find a property and we can help you from scratch, how to, you know, do all the process. And then also Shomel, which Vonetta, you got the chance to meet them, Shomel and Farhan Malik, the Apex Group. Those are, I can give you, and you know, for us to recommend is not easy, but I recommend those 2. I can give you the information later on, Vonetta, so you can share it. But yeah, I recommend them.
And one thing I will say, just for everybody on, is, and just thanks for those great, I know them, they're amazing in what they do, very good professionals. But you are right, Dina, there are a lot of investment groups out there, and who do you go with? What makes sense? Are these people legitimate? Like, what happens if you lose, if money gets lost? So I would encourage you to make, you know, seek out qualified people to partner with. As Jessie said, one of the things she does is everybody comes to the table with some type of value. So seek out, you know, experienced people that have been doing it. And just maybe if people are just trying to pull everybody together and start something, all right, let's sit down and let's have some real conversations about it. So we're in our series, we're going to talk a little bit more about that, partnering with investment groups and syndications. So that's part of the series as well. And you'll be able to get some additional information, but definitely great question. And you want to be able to be sure that you're with the right people. You know, I recently connected with an investment group who was, and this could be a bad experience that somebody was a part of. They were in getting people to invest $150,000, and at the end of the day, their commitment of being able to sell the property, they weren't. So people had invested all this money, and then they couldn't sell the property and was trying to do more stuff. So you got to be careful. You got to be careful.
Yeah, you got to be careful. Yes, yeah. But these people that I'm recommending, they've been doing this for years.
Yep.
They don't, I can tell you like 95% of successful. Like, I cannot say like 100%, but they were able to, I mean, all the property, like they're doing this like on a regular basis, flip, fix, I mean, hold, whatever you want. You want to invest in fix and flip, good. You want us to buy properties and hold it for you, and they manage the properties, they do it. And they doing like, they managing millions of dollars. millions of dollars. So this is like, they're very reliable.
Right. Yeah. The one, so we're going to get the recommendations from Jess. Also, one of the ones she mentioned, we're going to have actually in our series. So,
oh, great. Yeah. Great. Yes,
exactly. Her people are legit, but just be careful while you're out there. What else you have, Belle?
All right. So in regards to, let's go back to the hard money lender. You know, this is something that always comes up in terms of making sure that, you know, if you have cash and or you don't have cash, like where to start. So when you look at hard money lenders, where are some of the things that you need to, where the places you need to look for to kind of solidify these hard money lenders?
Yeah, they will check your credit. They will check your experience, like I mentioned before. And it depends on that. They also will ask you, okay, where's the property address? Do you have the contract? What do you want to do with the property? You want it to, you know, fix, flip, or you just wanted to buy it and hold it? What are your intentions with the property? So that's why you need to do the research and make sure, you know, because they're gonna look, they're hard money lenders, but they know, you know, what they're doing. So they want to make sure when you get the property, you're able to execute the plan that you have, you know, and the value makes sense. How much is you're buying the house? How much you're gonna put into the house? What is the after repair value? First thing they ask, how much is the after repair value? So that's your homework to do, because they will ask you for those questions.
Exactly.
They want to make sure you're gonna make profit and you're gonna be able to pay them, you know, pay them back.
We'll do one more question here. So I have a question here regarding asset managers. And when you're operating outside of the local area, what are some of the considerations you need to think of if you're not familiar with the area? We see a lot of people that are looking at new cities, new developments, and or familiar cities that we're familiar close to, but not necessarily live in. So whether it's 100 miles away, 200 miles away, different state, what are some things that you need to kind of consider as relates to asset manager properties? I mean, property managers, yes.
Well, I like to go by recommendation, referrals, and you have to find, I think, a local real estate agent that knows the area very well. So you can have the right numbers as far as rental income, and so that's the way you look. And refer, try to get referrals. Try to get those referrals because, and you know, we can refer you a management company local here, and usually that management company, if you're looking in other areas, they can refer you to, you know, a company on that, you know, particular area that you're looking to buy.
And Jessie, just to clarify, would you say that most, or in a lot of places, property managers are also real estate companies, or a lot of times you would find real estate companies who also offer property management?
Yes, there's not like many real estate companies that are property management companies, but you will see that. Like my office, we're real estate company and also property management. I know one of I have a friend that she managed like 1,500 units. She concentrate only in management. So it depends in the area. Yeah. But you have to consider that you're gonna have a very the rent, the amount of is a very good rent. Like I can say in this area, like New Brunswick, very good rental area, you know, market area, Plainfield, North Plainfield, Elizabeth, you know, that's those areas that I know. That's what I recommend a real estate agent, a local real estate agent in the area that you're, you know, looking to buy.
So, and I would also just add for people, if you're looking to purchase outside of your state, so if you want to buy something in, you know, you're in New York or New Jersey and you want to buy something in Florida, connecting with a local realtor in that market. But then it's like, you know, well, how do you find that local realtor in that market? There are national minority trade organizations, realtor organizations, or you can connect through the organization to find a local realtor in that market. So if you want to buy something in Florida, right, there's the National Association of Real Estate Brokers, which is a Black organization of realtors. there's also the National Association of Hispanic Real Estate Professionals, and it's for Hispanic for realtors. Not that it's all Hispanic or all Black, but the realtors that are like 70% that are part of those organizations, are Black or Hispanic. There's also an Asian one, the Asian Real Estate Association of America. So there's a lot. If you wanted to just find how can I connect with, a Jessie in Florida, a lot of us sometimes we go right to those national associations to look for people in those particular markets because they're already reputable, and then they can probably refer you to somebody that does that property management process. So definitely good. Somebody's mom is part of one of the organizations. Okay, mama.
Yeah.
All right, awesome. Well, you know what, Norvell, I know we probably had like 500 more thousand questions, but just out of respect of time, do you want to kind of close it out? Maybe we can, just thank Jessie. What do you want to do?
So we know that.
No, we don't know. We don't know your thing went.
Sorry. So before we hand over to Andrew, we want to just announce the individual who has received a registration for our 12-week series, which we're excited about. The gentleman's name is Isaac Adams. Isaac Adams, thank you so much for supporting and attending.
Yay,
and you
Isaac.
have just won registration for the 12-week series. We'll send you confirmation via email, and thank you so much for attending.
Awesome. Well, Jessie, I just want to say this was amazing, and I know that everybody was able to package up some amazing information. Please, I would encourage you, if you want to get into investing, join the series and get on the road. Again, guys, remember what I said. Jessie started this in 2019.
Yeah.
The crowd is over there going, wow.
Yeah, start with the multifamily 2-unit. That's your start, because you get to know how to be a homeowner and how to be a landlord in a small scale. And then you're going to love it. Then you're going to continue. Okay.
I love it. Andrew.
Oh, this is great. Thank you so much to our wonderful guests this morning. Thank you so much to Vonetta and Larissa and Norvell for putting this on. But more importantly, thank you for the people that attended this. Like I said before, our intention is to provide a game plan for your generational wealth, and provide an opportunity for you to be legacy makers and legacy breakers in your respective families, to provide these opportunities for people behind you, but more importantly, get into the game of life and get into the game of America, the American dream. So on behalf of the Metro New York chapter of the National Black MBAs, I wish you a very great weekend, and please take advantage of this real estate series coming up. This information is great, but more importantly, you see the leverage of the brand where, she's, Vonetta mentioned National Association of Black Realtors and National Association of Hispanic Realtors. We are, we intersect. We do intersect as a community, and these opportunities are there for you as a member and a member of constituents. Thank you. Have a great morning.
Thanks, everybody. Bye, Jess. Bye, Larissa. Bye, Andrew.
Thank you. Thanks, everybody. Thank you, Jessie. Thanks, everyone, for joining.
Totally.